making sure that we have up-to-date guidance which explains to people in this sector and in others what we expect of them by way of ensuring that they're fit to hold a consumer credit license. So in short, it is not an area, well, it is an area in which we have been very active. It is an area in which we continue to have a very active interest, and I have quite a few members of my team actively working on it at the moment. But if you're saying that we missed something, that there are things going on that you think we should be addressing, then I, for one, and my colleagues, I'm sure, we're very interested to know more about that.
Thank you. I think Joanna would like to comment.
Yeah, I would, because I feel very strongly about this, because we have clients who phone up National Debt Line, people who are in financial difficulty, and they've been to a fee-charging debt management company, and they're actually in a worse position than before they called them, and that cannot be right. Now, the OFT, as David says, has done some excellent work, actually, both in closing down some companies that were acting very unethically, and also in the review that they did last year. So they warned 129 companies. If you talk to the officials in David's team, they will tell you that they found almost 100% non-compliance with the rules. So there's misleading advertising. You've seen the adverts, you know, you can go away on holiday, you don't need to worry about this stuff, we'll sort it out for you. Misleading advertising and then poor advice. Well, what is, if a company's got misleading advertising and poor advice, you know, what has it actually got going for it? So I do feel very strongly. I think the problem for the OFT is that this stuff is like weeding. You know, you take down a little bit and others spring up. It's a bit like the claims management companies we might, I suspect, get onto later in the debate. You know, they move to where the money is. But the reason I feel so strongly about this is that, you know, when the government is looking at, well, how are we going to help all the people who need money advice over the next little while? I've been saying to ministers, what you cannot do is say, well, the private sector can look after this stuff, because actually what that report showed is that the private sector is not fit. Currently, maybe sometime in the future it will be, currently it isn't fit to offer that advice.
Great. Okay, do we have another question? There's one down the middle here. So, you've got the mic.
Hi, Rod Howell from RM Curtis, Credit Manager. My question really is general to the whole panel, in as much as the employers are currently, because of the recession, not being able to borrow money as they used to, in many cases being refused loans, and companies which don't borrow at all don't want to get into that bandwagon. So they're looking at shrinking their businesses, and that means cutting prices, and also leads to cutting jobs first before they will actually go and see a bank manager. So with that, and also the increase in utility costs, talking to be 15 to 20% hike in those that is coming up, I think the next 3 years are going to get even tougher. And I don't think the banks are going to play a large role in this unless they become user-friendly.
Okay. Don't know if Ivan can...
I think that's as much as a commercial question as it was a consumer question from this morning to this afternoon, really. But I think both situations apply to a consumer as they do to any commercial organisation looking to borrow, and the challenge that are put on each of them. And I think it goes back to the source of lending. You know, banks have got to be, I think, smarter in how they segment the products to meet the customer's needs. Customers also have a responsibility to borrow responsibly, as well as lenders have a responsibility to lend responsibly. And I know that's a broad brush stroke, but certainly what we're finding in our collections team is, as you talk to customers, they were missold. They don't understand what they borrowed. Sometimes, and to your point, they didn't understand, and sometimes they just want to claim they didn't understand. But it's opening up a dialogue, looking at how you actually meet the customer's needs with the product, but also the customer taking responsibility as well and saying, what can I afford?
Can I come in there, because it's a very interesting question about small businesses, Rod. We run something called Business Debt Line, so that helps, kind of what it says on the tin, it helps small trading businesses in financial difficulty, helping about 30,000 businesses a year. And what we're finding is that increasingly businesses are coming to us right at the end of, almost at the end of their life, when everything else has been exhausted. And you just feel, if only they had come earlier, or somebody had told them earlier what the choices were. And of course, it's not only bank finance, is it? There are a whole range of different ways of financing business. And many of these, we're talking about tiny businesses, 1, 2 employees, you know, small builders, hairdressers, that kind of business. they just haven't got that knowledge. They've just got on with their thing, hoped it will all come good, and often it's too late for us to help them. So what we're saying to government is, actually there's an education job here to be done in terms of helping small businesses, and I'm sure the banks can help with this too, because they do a lot of work with their customers, although often for these very small businesses, they won't actually know. Quite often these businesses are operating on consumer, you know, on their own credit card or bank account. They won't, unless they're declaring themselves as a larger outfit, it's hard for the banks to help them. But there is help out there, and there could be, but somebody needs to ramp that up and say, actually, because if we think that small businesses are the engine of the economy and they're going to pull us through this recession, well, we need to do a bit more to help them.
I think it's also moving into businesses of sort of 30 million turnover. It's starting to affect that now also. It's not just small, it's really come up in the middle there.
Well, that's where banks, I think, can help, and Simon probably will be able to tell us about some of the help they do give.
Well, I mean, the Santander Group is quite small in this particular area at the moment, but it is an area that we see as an opportunity for growth, because I think one of the things we want to do is to broaden the scope of our balance sheet. I mean, essentially, we're two ex-mutual building societies that have come together, and so we are looking, you know, to deal more in the corporate. But you're right in the terms that, you know, at the very small end, it's often hard to distinguish between what is a small business and what is an individual. You know, we see plenty of examples in our consumer books of what was supposedly a car loan. It's actually a van loan that's been used to fund a business, and that creates its own dynamics in a collections environment when things don't go wrong. You know, clearly, as a banking sector, the small business market is one that has been dominated by 2 or 3 players. That those 2 or 3 players have significant balance sheet issues to wrestle with at the moment. How they get through that and how other parts of the industry step up to the mark, I think, is one that is going to once again be quite challenging. I mean, clearly it's a challenge that's been thrust at the banks by government and regulators alike. So I'm not sure that I have all of the answers, but I know that it's an issue that you know, senior management within the banks are looking at carefully.
I just think it is an issue about financial literacy, and I can understand the point you're making, because you know, when I read the inventories of the goods that we've seized in our commercial book, I mean, it is the hairdressers and the pubs and the small businesses, you know, where we've got the stock of the shop and the computers and the boardroom table, often in our sites, I'm afraid. What is, again, something that I feel as a very junior politician, as a district councillor, but there is a failure by politicians to actually get up and tell the public what will happen to them if they do not pay their debts. You see, we rely a lot on the regulators to tell the industry how to collect debt. But what we should be seeing is a political lead. I'd like to think with a change in government that would come, where people are actually reminded that if they borrow money and they do not pay it back, not from the banks, I'm talking because the banks have got no credibility with the public. It needs to be senior politicians who are saying this is what is going to happen. And when we get to the doorstep, it shouldn't be a shock. And so many times, you know, we turn up, and who are you? What are you here for? I don't know anything about this debt. And whether they do or they don't, the lack of financial literacy about running a business is shocking. And it's something that I know the Institute of Credit Management have started to tackle, and good on them for doing that. But there is so much to do in this area, and it should be, you know, Vince Cable, for example, who's not here, but if he were here, I'd be telling him, he should be, instead of worrying about, you know, the AV vote, he'd be better telling businesses about what they need to do to get into proper financial shape. And this is the sort of dialogue that I'd like to see politicians giving the public. Whether the public want it or not, that's another matter. Whether they want to accept it and deal with it, that's another matter. But nobody says it. You never hear a politician talking about having to pay your debts.
I think the point I'm trying to make is that consumers are going to be
they're going through the belt tightening, but there's more pain to come because
Yes.
of utility bill hikes that are coming up. So I think it's they're not getting salary increases, bonuses that they used to get, because companies aren't just doing that.
Yeah.
Their budget is shrinking in the household.
Yes.
And I think that's coming more, there's going to be more of that over the next 3 years.
But
And that's
who's-
where consumers are hurting.
Okay, thank you. I'll just move on so we get as many questions as possible. Okay, one there and then there, and see if there's any over here in a minute.
Well, I'd like to follow up on what Rod has said and what the panel have said, because I think there's almost a culture growing
Can
up.
I just ask you to say where you're from?
Oh, Joan Yeadon, Credit Control Consultancy. I think there's almost a culture growing up of no need to pay. And I think organisations like the Office of Fair Trading don't help this. I know David's new, so it can't be levelled at you, but they don't help by commenting on things like enforcement. I mean, I think that the Office of Fair Trading and its successor body is actually about treating customers fairly. That should be concentrating at the front end of the transaction. When things have gone wrong and the poor old creditor wants to get what's owed, I don't think that the OFT have any place commenting about things like charging orders. Because a charging order is at the end of quite a long process, and it's not about securing the debt by property, it's actually securing a county court judgment or a high court judgment using the debtor's assets. So I'd also like to refer that to David, and also I'm sure Claire would want to get a £3 thing. Also a question for Claire as well. I searched high and low for the sherbet chocolate fountain, so I just wondered what had happened to it.
Oh, I'm sorry that's not here today.
Right, David and Claire, I don't know who wants to go first.
Okay,
on-
I'll have a crack at that. First of all, it absolutely would not be the OFT's policy or in any way of encouraging a culture of no need to pay. I mean, if you're in a position where you've taken a loan, then you have an obligation to repay it. We have no contention with that at all. So that's the first point to make. The second point is at what point it's appropriate for the OFT to intervene. And I think there, I would just step back for a moment, actually, from consumer credit to what the OFT is about, what our purpose is, and the various responsibilities we have, the tools that we have at our disposal. I mean, we sum up what we do as making markets work well for consumers. That's what we're about. There are various ways in which we can intervene in markets. For example, we can take enforcement action. But crucial to the successful operation of markets in this country are well-informed consumers and well-informed businesses. Therefore, we do not limit our intervention in markets to when things go wrong. We actually find it much more productive. I mean, of course, we do intervene when things go wrong. I mean, that is clearly part of our role. But I think if simply to focus on that end of the transaction, if you like, would be extremely short-sighted. I think it's much better, a much more productive use of the resource that we have available to intervene early on. And one of the ways in which we can intervene early is by setting expectations. We set expectations in various ways, not least in the consumer credit through the guidance that we issue. So we make no apology for the fact that we will intervene in various stages of transactions, and that we make no apology from the fact that trying to shape the way markets operate by making clear our expectations, both of consumers, and let me be quite clear about that. We make clear to consumers what your rights are, but what your responsibilities are as well. My other job, with my other hat on, is responsible for Consumer Direct. Quite a lot of what Consumer Direct does is disappointing consumers by telling them, you're wrong, you don't have a right of that sort. So we will intervene on behalf of consumers, but we will also intervene with businesses to make very clear what our expectations are.
Thank you. Claire, do you want to